Welcome back. Let's keep talking about filing requirements. There are different filing requirements based on whether a taxpayer is a non-dependent or a dependent, whether they are under age 19 or a full-time student under age 24, or if they have other circumstances that require them to file a return, such as being self-employed or an alien. Yup, I said alien. In tax terms, who are considered aliens? When we mention an alien, we are referring in the simplest terms to people who are not U.S. citizens. Aliens can be either non-resident or resident aliens, but that's beyond the scope of this course. Let's review the filing requirements now and start with non-dependents. From your reading, what are the 3 factors that dictate if non-dependents are required to file? If you want to pause to look it up, great! Tax research is a skill that all tax preparers will need. We are in Chapter 2 of the Participant's Guide, on the page called Filing Requirements, Non-Dependents. For non-dependents, the 3 factors that dictate if they are required to file are gross income, filing status, and age. There are 5 different filing statuses, but we only have 3 listed on the screen. The last 2 we will discuss in more detail later. So far, we've discussed filing status and age already. The 3rd factor, gross income or total worldwide income subject to tax, is discussed next. Sometimes ownership of income is determined by state law. We need to distinguish who the gross income belongs to. States are either separate property states or community property states. In a separate property state, as opposed to the community property states you see listed here, income earned by either spouse belongs to whom? In a separate property state, income earned by either spouse belongs to the spouse who earned it. If the couple files separate returns, the spouses report their own earned income. In a community property state, income earned by either spouse belongs to whom? In a community property state, income earned by either spouse belongs half to each spouse and would be reported that way if they filed separate returns. Now, let's complete our next check for understanding question. Which one of the following does not dictate whether a non-dependent is required to file a tax return? Gross income, filing status, age, or blindness? Pause and take your vitamins. Then resume for the answer. If you guessed D, you are on your game. Gross income is incorrect. Gross income is required. The precise gross income threshold varies depending on the taxpayer's filing status and age. Filing status is incorrect. Filing status is one of the factors that determine the amount of gross income a non-dependent can receive before they must file. For example, for 2024, most taxpayers under age 65 who file as married filing jointly do not need to file a return unless their gross income is at least $29,200. By contrast, most single taxpayers under age 65 must file if their gross income exceeds $14,600. Age is incorrect. Non-dependents who are age 65 or older may earn more income before they are required to file a return than a similarly situated non-dependent under age 65 due to the increase in their standard deduction. Blindness is correct. While blindness is a factor in determining the standard deduction for non-dependents, it is not a factor in determining whether they are required to file a tax return. It is, however, a factor for a dependent's filing requirement. Thank you for being such a rock star. Once we know the filing status, age, and gross income, we can determine if a non-dependent is required to file. A little later in this session, we will be using this table found in the filing requirements. Non-dependent section in the Participant's Guide for a class exercise to determine if a taxpayer is required to file a return. When determining if a non-dependent single taxpayer under age 65 is required to file based on their gross income, what amount must you consider that makes up the taxpayer's gross income threshold? Pause and resume when ready. $14,600. A non-dependent under age 65. Taxpayer's gross income threshold amount consists of their standard deduction. What happens if a taxpayer or spouse is over age 65? there is an increase for age. $1,950 for single, and $1,550,000 for married filing. Jointly, married filing single, and qualifying surviving spouse. It is worth noting that even if a taxpayer files married filing jointly, if they didn't live with their spouse at the end of 2024, they have to file a tax return if their gross income was at least $5. Only non-dependent taxpayers can use this chart to determine if they have to file a tax return. A dependent has a different set of requirements to consider. A dependent taxpayer may have to file a return depending on several factors, such as the amount of gross income, consisting of earned or unearned income, and their personal characteristics, age, marital status, and blindness. Remember when we talked about non-dependents filing a tax return? Which one of these items was not used to determine a non-dependent's filing requirement? Blindness. Note that the additional amount for blindness does not get included for non-dependents, but does for dependents when determining filing requirements. Once we know their earned, unearned, and gross income, marital status and age, and whether they qualify for the additional deduction for blindness, we can determine if they have to file a tax return. For dependents, it is not as simple as looking at their standard deduction alone. For example, a single dependent under age 65 would have to file a return if any of the following applied. If their unearned income was more than $1,300, if their earned income was more than $14,600, if their gross income was more than the larger of $1,300 or their earned income, up to $14,150 plus $450. This can be a maximum of $14,600 because their standard deduction cannot be more than the single standard deduction of $14,600. Let's look at another check for understanding question. Which of the following amounts is the filing requirement for married filing jointly, where both spouses are under the age of 65 and they live together all year? Gross income of $14,600. Gross income of $16,550. Gross income of $29,200. Gross income of $30,750. Did you guess? See, you little tax champion, you. Let's walk through each of these. Gross income of $14,600 is incorrect. This is the filing requirement for a single taxpayer, under age 65. Gross income of $16,550 is incorrect. This is the filing requirement for a single taxpayer age 65 or older. Gross income of $30,750 is incorrect. This is the filing requirement for married filing jointly, with one spouse age 65 or older. Gross income of $29,200 is correct. If the taxpayers are filing married filing jointly, both under age 65, lived together all year, and their income is at least $29,200, they must file a 2024 tax return. Thanks for playing. Now let's look at who has to file a return even if they do not meet the gross income filing requirements. A taxpayer is required to file an income tax return, regardless of the gross income filing requirements, if they have certain types of income or circumstances. We intentionally kept these bullets short and even a bit cryptic, so that you can try to figure out what they are before I tell you. What does Schedule 2, Form 1040, refer to regarding having to file a tax return? If the taxpayer owes any of the special taxes reported on Schedule 2, they have to file a tax return. Some of these are alternative minimum tax, additional tax on a retirement account distribution, and uncollected Social Security or Medicare tax on tips or wages. What is net profit referring to? And does it matter how much net profit? Net profit is referring to net earnings from self-employment income. It is any amount of $400 or more. You will soon realize there are a lot of acronyms in tax preparation. APTC is the acronym for the Advanced Premium Tax Credit. Why could having this require filing a tax return? If a taxpayer receives this credit in advance, they will have to file a tax return to reconcile whether they actually qualified for the amount they received. What does distributions refer to in the context of who may have to file a tax return, even if they're under the filing requirements? The taxpayer received HSA, Archer, MSA, or Medicare Advantage MSA distributions. These are tax-advantaged medical savings accounts. And last, what does clean vehicle refer to when determining who has to file a tax return? Pause and just breathe while you think. If a taxpayer purchased a new or used clean vehicle and transferred the clean vehicle credit to the qualified dealer in exchange for a reduced purchase price, they need to file a tax return. Now we know who has to file. But could there be times we want to file a tax return even though we do not have to? There sure are. Why would I want to file a tax return if I didn't have to file? Sing it with me. Money, money, money. A taxpayer may want to file a return even when it is not required if they had federal income. Tax was withheld from pay, so they can receive a refund of the tax withheld. Maybe they made estimated tax payments, so they want to receive a refund of taxes paid in advance. They also might qualify for a refundable credit, such as the Earned Income Credit, or EIC, Additional Child Tax Credit, or ACTC, Premium Tax Credit, or PTC, Refundable Credit for Prior Year Minimum Tax, or American Opportunity Tax Credit, or AOTC. Let's look at another check for understanding question. Which of the following taxpayers is not required to file a tax return? A single taxpayer with net business income of $500, wages of $10,000, and withholding of $100, unreported tips of $500, HSA distributions of $100. Pause to think, and remember you are the best. If you guessed B, you are the star. Let's walk through each response. Net business income of $500 is incorrect. A tax return is required if net business income is over $400. Unreported tips of $500 is incorrect. A tax return is required if there are any unreported tips. HSA distributions of $100 is incorrect. A tax return is required if there are any HSA distributions. Wages of $10,000 and withholding of $100 is correct. Since the wages are less than the filing requirement for single taxpayers of any age, the taxpayer is not required to file, but may want to file to claim their $100 refund. Congratulations for a job well done. It's time to stop for now. When we come back, we'll put all this filing requirement knowledge to use with a class exercise.